help me welcome to the stage right now our panelists, Crypto Marina, or otherwise known as her real name, Marina Petrichenko. From Altana Wealth, Mr. Roland Roventa, who we've seen already. Welcome back. From Gtex, Dennis Lothbrok. Also from Tomorrowerse Capital, Adrian Niculescu. And the person who is going to shape this conversation in the right way. Again, we welcome her back. She was here yesterday. From PSP Angels, Viktoria Soltez.
Hi everyone, thank you very much for joining us. It's a very, very interesting panel. Crypto investments and the in and out of it. Wish we had more time than 25 minutes. This is a subject that I'm sure that everybody can talk about it for days and days. But I've got my colleagues here, and I'm very curious about their insights. I don't even know where to start. Maybe we can start discussing what is the current situation of the investment as of today. Why crypto is a form of an investment vehicle when it was supposed to be just an opportunity to actually exchange value within the blockchain, and what is the future of the crypto investments and how to survive obviously the winter and how to make the most out of this volatile market. So I'm here with my colleagues. Maybe Dennis, you can start as a technical analyst professional to give us some insights about what is the current market, what are your tips for investors, and how do you see the future, just to start the panel, and then maybe we can join in with all the questions.
Sure, absolutely right. First of all, we are in a bear market, right? Even we are rising now, it's still a bear market. And actually, during the bear market, it's the best time to find the projects, because the best projects are usually built during bear market when nobody looks around, everybody just crying, watching their portfolio going down because somebody bought Bitcoin at 60K and all this stuff, which wasn't right, absolutely, because you have to analyze the market. And right now, while we are bouncing, of course, you should analyze and prepare where to buy next and what time to hold. Even if the bull market starts, that will be a great decision. Still to buy in the DCA, but not like when the price goes down. You can even buy when the price rises because you see the trend. Your trend is your friend. Everybody should know this part, right?
That's right. And the funny thing is that when I was talking to a couple of my colleagues about the investment and us as payment professionals, we're also dealing with casinos and gambling companies. There is a very interesting parallel balance between predicting the future and seeing the investment as a form of like gambling if it goes up and down. And I think that's how technical analysis can help, because obviously it's not just a chance of the market goes up and down, but with the informative market analysis you can actually predict the future, predict how different coins are moving.
Yeah, kind of, but first of all, it's not like gambling, it's analyzing, it's just mathematics, pure mathematics, so you just analyze and you find where to buy, where to sell, but you do not play the game, you do trading, and you actually trading against other people who are usually more smarter than you.
Yeah.
So you need to oversmart them and make profit out of this.
That's right. Roland, tell us a bit more about your project. I'm very curious to hear.
The points that Dennis is making, and this is still a bear market. Although Bitcoin is at 28K, which in a bear market is quite achievable, it's a great achievement. Things will not just go straight up to all-time high. It will not just recover in 1 or 2 months, and people should have patience when investing in digital assets. Myself and my company, we're investors in the long term. We do not really care about the fluctuations over the next couple of months. So if you want to believe and if you want to invest, my recommendation for everyone is to be invested in the long term and have a multi-month to a multi-year time frame. Investors are still warming up to this industry, especially after last year. After FTX, everyone was completely scared to invest in digital assets. And although the issues that arose in FTX were not the issues of blockchain. Blockchain worked perfectly, DeFi worked perfectly. There was the issue of fraud and centralized entities which ruined the image of digital assets. And recently, I think this year is a great development mentally, that when Silicon Valley Bank went bust, I believe it was 2 weeks ago, on that day, Bitcoin was up 9%. And it was the first time in my experience that Bitcoin was doing what it was supposed to be doing. Bitcoin was invented in 2008 when banks went bust, and on the Bitcoin blockchain, the first message was the New York Times message of 2008 banks doing bailouts. And this is the first time since then in which Bitcoin has been doing what it's meant to do. And Bitcoin, in my opinion, it's not meant to be a global currency. We're not going to be playing with Bitcoin at our grocery store. It is more meant to become gold 2.0. And when you compare Bitcoin and gold, gold is 20 times larger and the supply is rather uncertain. Maybe tomorrow Nigeria discovers 20 million tons of gold. But in Bitcoin, you know exactly what the inflation will be, and you know exactly what share of the total market you have. So if Bitcoin and the newer generation will invest more in Bitcoin in comparison to gold, then you have potentially 20 times upside. So there is still lots of upside in this trade, but it's not a trade for a month, it is trade maybe for a decade.
Right. And Marina, it's interesting to hear your point of view because you're a marketing professional in this industry. So how you market such volatile product? What are your options as a marketing person when it comes to investment?
First of all, I cannot disagree with the previous speakers that bear market is a time like cleanup time, right? Only the strongest and real projects going to survive with a real community out there, with a real product, and all the hype projects will go out. And the Silicon Valley situation showed us that actually you need to consider plan B, you know, because it's your safe haven, you can trust banks again. So I do believe it's all really beneficial, even though all the situation, as you know, lots of VCs were funded by this bank. Lots of companies were funded by this bank. So from one side, you can be scared that it's bad, but I think it's actually good in general, in the long-term vision. Talking about your question, the marketing side, as I was talking yesterday on the crypto marketing panel, right now it's all about the transparency communication, building trust with your community, and now it's more important than ever. You have to show that you care, that you're building something really cool, you build it daily, you're not wasting money, on the boats of your investors. It's maturity of the market. The market becomes more mature, more regulated, and it's all the lead us to become like a normal industry.
It's always good to see the good part of the winter as well. Tomorrowerse Capital, tell us a bit more about us, Adrian, and how the Tomorrowerse Capital is tackling these issues and what is your solution for the investors.
Hello everybody, I'm Adrian Niculescu, and I'd like to share a few ideas which could be very relatable to everybody. First, I started Tomorrowerse Capital in November last year, being somehow negatively impressed about what happened in the market, and I saw that even the business models were okay, the people behind projects and platforms and even investment funds were the ones who generated the chaos. So the relatable idea, how I've started to be an investor a few years ago, not so many years ago, but at least 10 years ago, maybe more than 10, I was a struggling entrepreneur trying to save money. And I wanted to save money using bank deposits, right? And I said, okay, I put 1,000 euros here, or 100 euros. Can everybody relate to this amount? Right? Because investing is like a muscle, it doesn't matter the amount you are starting. But what happened all the time after, let's say, 1 week, one month, I needed those money, so the deposit disappeared. The shift came for me when I started to put money in stocks. Because in stocks, the withdrawal is not instant usually. It takes 2 days, 3 days, 7 days, So that one for me was the moment when I started to accumulate, because I was not able to touch the money when I needed it, That was the moment for me when I started to become an investor. And investing is like a muscle. From there I started to work on different things. As a formation, I'm a sales, marketing, and business development professional. You read in 1 minute, just I could speak for days about it. So I'm involved in projects, and one of the projects I'm involved with is Meta Studio, which has a stand outside. It's a metaverse for business, it's a metaverse business for content creators. One of the platforms you will hear a lot about in the future, so please take a moment and come to our stand. So what is very important is to analyze the trends and the communication. I'm a marketing guy, so for example, when everybody is talking about a project, usually this is fueled by paid media, and the price is rising for the asset of that company. So if you want to buy, don't buy then, because at that moment the initial investors are selling, you will buy at all-time high. After that the price drop will come. So wait for a little bit. And also the market, and we can talk more about it, is driven by greed when price goes up, and fear when price goes down.
Yeah, as Dennis said, that everything is about analytics and understanding the market. But how can you understand one thing, guys? The most traded digital asset is actually connected to the dollar, right? The USDT. In your opinion, is this investment is a new opportunity to use a different investment vehicle, which is volatile, and that's why obviously the market loves it, because there is a good opportunity to make a lot of money in a short time? Or you think that this investment is just a side effect of the good projects and the market is actually correcting itself with this volatility? I don't know who wants to join into this and give me some thoughts about it. Is it the investment is still just riding on a scam and it's a very volatile part, or you think that the market is auto-correcting itself, obviously without having regulation, and it is still safe to analyze the market?
I think it's a bit of both here. I think that in time the market is maturing itself. Of course, it's still a very early industry. The rate of growth is linear but very slow. And on top of a very slow rate of growth, you have very high highs and very low lows. And crypto cycles are fueled, as colleagues have mentioned, by fear and greed. And of course, at the top of the cycle, you have speculators coming in. Everyone is talking about crypto. That is probably the best time to sell. And in moments like this, or maybe like last year, nobody's interested in crypto. That is the time to buy. And this is a auto-cleansing mechanism that in time allows you to indeed pick the best projects, and it cleans the industry from the people who are scammers, the people who are unregulated properly, and it just allows the proper projects to thrive and to carry on. So if you look maybe 5 years ago at the top 50 projects, it will be completely different to what you see today. And most likely, if you look from 5 years from now on, it won't be as different, but it will still be different, because this industry is innovating and only the top projects remain. And in this case, the only top projects which with certainty will remain over the next decades are Bitcoin and Ethereum. The rest, we'll see about that. Of course, I have my belief that some projects will exist. You have lots of DeFi protocols which are really strong, but you never know that. And I think one of the advice for people is that when you want to time a crypto cycle and anything in general, is that the market tops on good news. So when everything looks amazing, that's probably a good time to sell. And the market bottoms on bad news. So when everything looks horrible, you don't see the light at the end of the tunnel, you don't know what else to do, that is probably a good time to just stomach the volatility and just press the buy button.
There is a meme about it on the internet, like a joke. Like, if you don't appreciate Bitcoin when it's 15K, it means you don't deserve it when it's 60K.
Wish it was that easy. I wouldn't be sitting here speaking to you. I would be, cashed out in Bahamas and enjoy my retirement if it was that easy to invest and make some money. But Dennis, please share some insights from your end.
Yeah, right. So I mean, during bear markets, as you asked, the price can be volatile as well. But if you looking for an investment, you need to check and do your own due diligence about the project. If they still delivering something, is there team working? Is there a GitHub account? They're pushing some updates. They can be slow in the marketing, because it's understandable. There is no point to advertise during bear market. But you need to check if they're really doing their product. That's going to give you a lot of sense if you should invest in this project at all. If their GitHub account is dead, most likely the project is going to be dead and the price is just going to fall.
I'm very curious about your opinion, Adrian, when it comes to market manipulation. We have seen that obviously if the market is not regulated, there are Ponzi schemes, insider tradings, and all that kind of nasty ways of making some inside people rich. How your company is filtering out these negative effects, and how you can actually secure that your investors, your clients are all safe and they are not subject to this manipulation risk.
I would like to share a framework if you want, if it's available for you, which has served me pretty well. So first, a personal development golden nugget. I did an event in 2013 with Nick Halik. Nick Halik is a speaker. You could search about it. And he said, Adrian, you can control weather and traffic, and you can control everything else. When it comes to investments, the most important is the asset allocation. And while everybody who is buying $100 worth of, let's say, Bitcoin, is called investor, actually all these, or most of the tokens and coins, they are utility digital assets, are not labeled as investments. So they are not regulated. The framework is very simple. So let's say don't put all your eggs in one basket. So if you see that coin, could be Luna or something else, offering the moon in the sky, don't put everything there, because you can't control a lot of things. You can't control manipulations. I do what is called digital asset investment banking. So I'm involved in creating digital assets. I list on exchanges. My biggest client is in top 60 on CoinMarketCap. Pretty big things. So I see many of the coins and tokens before becoming live. So I see what's behind that. So there are a lot of things you can't control, but you can control the asset allocation. So for example, how I do it, I don't keep everything in crypto. I keep like 30% in crypto, 30% in stocks, 30% in real estate, and 10% other things, including the cash position. You need to buy bread and other things. And with crypto, my framework is also very simple, but it takes a lot of work. It's a 40-40-20. 40%, top 10. Imagine that, I don't know, let's say Luna is collapsing tomorrow, right? Is from your crypto is one of the, let's say, 10 coins or 5 coins in your 40% of the portfolio, it will be something small, right? So 40% in top 10, 40% well-researched projects from top 100, and 20 you can have margin trading or even dog coins or some other things like this. But my most profitable token from this small percent was Shiba. We did 200x. 200x.
It was a lucky guess, and here I have to.
It was not a lucky guess, and in the next portion I will share the framework for the VC investments.
But here you have to definitely stress with everyone, this is not an investment advice.
Nothing is investment advice.
So please don't take it as
this information is for entertainment purposes,
yes, exactly.
but I'm sharing what works for me, and anytime I can show, I can teach things working for me. It's my personal experience. Everybody has to do his or her own due diligence.
Thank you, Adrian.
It's the most valuable advice.
Marina?
I just want to add two things to that. When you mentioned that when someone actually promising you some returns of investment or guarantee that okay, our token goes to $100, so you get like 10% in a month. This is absolute red flag. Never trust this project because nobody ever can predict any price. Even the best technical analysis cannot be like 100% sure. So that's first thing to it. Another thing to it, and I'm really sorry, like it's a great return of investment that you did with Shiba, but it's not like even real crypto project, and it has no value for the world and for me, like a true believer, in the all the blockchain technology and how we revolutionize the world. It's a joke project. It makes this industry looks funny and speculative and not serious, So I'm very sorry that projects like Shiba even exist.
It was an example that it was a piece of the 20% of the portfolio, so anyway, very small. So, but this type of portfolio is called portfolio for any weather. If it's a bull market or bear market, overall you are okay if you do the work. It needs work.
Roland, what do you think about that? Yeah.
As Elon Musk, I think he says that memes run the world, so that is also the case with Shiba. Yes, it has no utility whatsoever, but it's fun, so why not? It's a community token, and the community tokens have the exact purpose to just be fun, and they have no other utility, and that is why people invest so much in them. But as an institutional investor, nobody's going to touch them. I think that people should realize that investing in digital assets, and if you want to do it properly by yourself, it is very time consuming. It can take up as much time as you can possibly give it, and it's a 24/7 market, so it's quite tough to handle the situation in which you can also trade on Saturdays and Sundays if you can end up having more free time. So if people are interested in investing in this space, it is also possible to invest in a company like ours or any other professional investment company in which you may invest a larger amount, a minimum investment according to their own rules, but you will be able to sleep at night and you will make sure that professionals will be the one managing your money.
Of course, there is no lucky guess when it comes to technical analysis, but what are your thoughts about investing in some joke project which actually catches up and makes you rich in a minute versus investing in something which is long-term profitability? How do you see that from technical analysis? How do you as a person, as an investor, can filter out these two things?
Most of the times it's just analyzing the market, and it's usually good projects. So you can kind of predict the price roughly, but you cannot say if you're going to go there for sure. So you can at least expect something if you are correct. Everybody makes mistakes, it's okay. And about the jobs projects, I mean, it's okay that they exist. We need some fun anyway in the industry, but you never should expose yourself too much with such projects. Even, I do trade them sometimes, but they're not taking more than like 1 or 2% of my portfolio. It's more just for fun. Okay, there might be a lucky guess. We just right away take some money. No, if not, okay, I don't worry about it. So it shouldn't be too overexposed to these projects, which doesn't bring really a real value to our industry.
What are your tips for investors? If you can just name like 3 top tips if you want to invest, do this.
First of all, read the market and analyze. But there's one more important thing that you should know. There's a good wording about this. When you actually invest into something, whether it be Bitcoin, Ethereum, or whatever the coin, if you buy it on a centralized exchange, it's good. You're buying there. You're supposed to be safe, but there's a good saying that not your keys, not your money. Because if you're a long-term investor, you should keep your investments a Gtex, MetaMask, Trust Wallet, whatever, because it's your keys and you have always access to it. Whatever happens to exchange tomorrow, it doesn't matter. Like with FTX, people lost lots of money with number 2 exchange because they held too much and they're overexposed their portfolio to that risk. So you always diversify your portfolio and try to hold for long term on your own wallets.
If I could add 3 tips, I think it's good to decide your investment strategy to begin with. You want to invest for 1 year, for 10 years, for 5 years, and stick to that strategy. That is really important. Second tip would be to know what you're investing in and be very well researched in terms of fundamental analysis or in terms of technical analysis. Should you trade short term, just know what you're doing and try to learn as much as possible. And third tip is to have conviction in what you're doing, because this market is very volatile. You can have years in which it's down 80%. You can have years in which it's up 500%. If you lack the conviction, you will not be able to hold through the volatility. So if you have the conviction and if you want to invest for the next 10 years, then just stick to your plan.
My advice is go for solid, trusted projects. Check who is the team behind it, who are the founders, who is the CMO, what is their background, was their previous company successful? Read the white paper, documentation, what's the product about, what's they actually building, is it actually useful? And then who invested in them, which VCs invest, where money coming from. If the project, for example, have investment from A16Z or like Binance Labs, most probably it's not going to fail because they already have lots of money. Even all the crypto go down, they can survive for 5 years more. So they're not just going to wash out or disappear. Also, it's important where they're listed even, or which exchanges. For example, if an ICO is running on the coin list, most probably, again, it's not going to fail because coin is making lots of due diligence. But if, for example, listed on token, for example, I mean, everyone knows it's a scam.
It's no scam.
I can argue with that. Just check out also which partnerships they have. If they have any partnerships with the big established brands, most probably it's also guaranteed their success. So think and analyze and never promise 10x tomorrow.
Couple of closing thoughts, Adrian?
I will close with the framework I used, and I've learned from people wiser than me. How to analyze a project. There are 3 things. And basically, if these boxes are checked, the risk of failure is very small. So first, look at the team, as you said. It's very important the quality of the people behind projects, because if they are serial scammers, most likely the project will be a scam, right? So look what they did in the past, what failures, what successes they had. The second, if there is any innovation, it could be technical innovation if it's a new blockchain, if there is a token. Maybe it's a business model innovation. For example, Airbnb, which is not a Web3 project, they have a patent for this business model, you know? So there is intellectual property there. Look for these things. And the third one is very important, look for mass adoption, potential of mass adoption in one niche. Right now, in Romania, let's say if you go to Mega Image, right, with your Bitcoin wallet, you are not able to buy groceries. You need a card from Binance. I love the Binance card. To be very honest. It's one of the best cards. I'm not endorsing Binance, I'm just using it like crazy, so it's very good. Look at these 3 things, and don't forget about diversification, about asset allocation, and about categorizing one project or the other as a scam or not is based on everybody's own due diligence. And because you said something about Lothbrok, I work a lot with Lothbrok, and it was very stable during this period, but as other exchanges, they have potentially, I don't know, PR
Thank you.
problems.
Thank you very much. Wish we had more time, unfortunately, but we have to finish the panel. But thank you very much, and please find my colleagues outside, pick their brains, get their investment advice. You have the opportunity to speak to the industry professionals, so please, everybody, shoot them with your questions. And thank you very much for your attention.
Ladies